Joining us right now, Dan Niles. He's the founder and portfolio manager at Niles Investment Management. And I don't know if you saw, there was a tweet this morning from Larry McDonald talking about just your average $250 billion pre-market trading change, right? That's literally how much the stock has moved in a morning. What do you make of it?
Well, I mean, if the guidance had been given in a vacuum, the stock would be getting killed. But what really saved them is commentary during the call and from the CFO. And there were two things. They said, number one, Blackwell shipments are expected to exceed initial expectations. So people were very excited about that. That's their newest chip. But the really big thing was they said, we expect demand to exceed supply for the next several quarters, not one or two, but several quarters in fiscal 26. So if you want to, believe the dream, that means that they just reset the bar lower. Things are going to accelerate as you go into next year. And so, depending, you're in a really great seasonal time of year for stocks. And so people just want to believe in the Santa Claus rally, and stocks.
Does that mean you're a believer? And what's the explanation then for the stock move? Our friend Kramer, who will be coming up in just a couple minutes, he put out a thing this morning saying the early morning shorts who sought to paint the tape negative for Nvidia now up against 7 large price target raises. So there were 7 analysts now who've raised it. He said that the whole idea that they missed guidance is a canard. It's bogus.
Well, I respect Jim a lot, but at the end of the day, out of the 59 analysts or so that have buy ratings on this, not one of them said, well, we think they're going to raise estimates by 1% for the upcoming quarter. So here's the thing. There's a short term and the long term. In the short term, as I said earlier, Andrew, people want to believe. It's that time of year. It's the Santa Claus rally. It's the best 3 months for stocks. You have an incoming administration that wants to cut taxes and deregulate. So you look at Nvidia, and they're telling you demand's going to exceed supply for the next several quarters in 2020 for next year. Right. So if you're a believer, you want to believe that. But there's no question that the guidance was below expectations, which is why the stock was down.
It sounds like you're the Grinch then. So then the question is, if you don't want to buy into Nvidia at these prices, which sounds like you don't, what would you spend your money on? And would you sell out right now?
No, I mean, what I'm trying to say, to be clear here, is, look, you're going to, at some point next year, I think you are going to run into an issue where you're going to need to see a return on investment for the money you're putting in. And so if you can think about Microsoft, right? They cut estimates after they reported the June quarter. They cut estimates for the following quarter after they reported the September quarter. So at a certain point, and they talked about at their Ignite conference, that we've hit a wall potentially. Have we hit a wall potentially with scaling loss? So I think at some point you're going to get a pause to digest this. I think NVIDIA revenues will double over the next several years again from here, because you've still got a ways to go to build out the AI infrastructure. I'm just saying you've got to be honest that nobody saw this being an issue. The names we like Amazon. They had a really great quarter. We see a solid e-commerce season coming up. We're looking into areas like software, because if you do have a cutback in what you need to spend for AI CapEx, that should benefit companies. We like names like Oracle. We think next year it's going to be about networking all of this AI infrastructure together and having enterprises get access to it. So